Iceland's central bank left its benchmark interest rate unchanged today for a fifth consecutive meeting. The central bank cited currency market intervention as contributing to greater rate stability. Ásdís Kristjánsdóttir, head of research at Arion Bank, is on the phone with me now. Ásdís, how long do we anticipate this balancing act between currency intervention and interest rates to continue? Do you foresee the central bank making a cut later in 2013?
Actually, the central bank has not stated for how long they will use the FX market intervention to support the krona. We have, of course, been seeing a slowdown in the economic recovery, and because of that, the central bank has been using the market intervention instead of raising interest rates to have an effect on households and firms' expectations. So I think that as long as the interventions are working and they are having an effect on expectations, I do believe that they will continue to use these FX intervention to instead of raising interest rates. Of course, it is very important that the central bank will also use the opportunity when they are seeing more FX inflow, for example, following the summer months, that they will use the opportunity to be on the buying side, because the FX reserve is fully borrowed, and it is very important that they will be able to buy back the FX they have spent to support the krona. I don't believe that they will actually cut interest rates, not this year. We are still seeing inflation above target, and although the economy is maybe showing some indication that is weaker, but we do believe that we'll probably see more positive signs in the second half of the year, and I think that the outlook could change quite rapidly.
1 month into the re-election of the Progressive and Independence parties, the same political alliance as in 2008 during Iceland's economic collapse, and Q1 GDP has shown that the economy continues to weaken. While these figures are a hangover from the previous administration, are we seeing tensions in the markets from those concerned about an 08 repeat?
Actually, it is right. We have the same government as was here following the boom years of 2004 and 2008. Of course, we saw here the economy was overheating, following, of course, globally cheap credit. We saw large FX inflow of capital, leading to a leverage boom, and resulted in a huge current account deficit, and, of course, banking system 10 times bigger than the size of the economy. We are already seeing some changes in the main emphasis, as the last government main emphasis was on reducing treasury deficit. The new government main focus is now on reducing household debt and boosting economic growth. For example, with reducing taxes on income, goods and services, and lowering various other duties, tariffs, and so on. So actually the household expectations have already gone up and has not been higher in 5 years. And therefore, I think that the GDP numbers for the first quarter will probably be the worst one if you look at this year. And there are, of course, some concerns that 2008 will repeat itself, but I think, however, that we have drawn some lessons from what happened and will therefore not repeat the same mistake again. Of course, the lesson from 2008 was that for a small open economy like Iceland is, we have to use some macro-potential rules or tools to maintain here both macroeconomic and financial stability. And actually, the central bank has published a report called Prudential Rules following the capital controls. So there is a common belief that what comes after the capital controls, that the monetary policy will then be complemented with some sort of macro-prudential tools.
The coalition government is trade-oriented yet Eurosceptic, claiming that Iceland already gets most of the benefits of full membership through existing free trade agreements with the EU and by being part of the Schengen visa-free travel zone. How is this likely to impact the Icelandic economy? And similarly, with European expansion halted for now, what is needed to stimulate domestic consumption?
The new government is opposed to Iceland's entry to EU, and therefore it maybe came as no surprise that further negotiation will not continue until referendum has taken place. So, like for now, we are seeing that krona will be our national currency at least for the foreseeable future. So I'm not quite sure that this will have an impact on the economy, at least not in the near future, because we are, of course, in capital controls. And therefore, what is the most urgent task now is, of course, to stimulate investment, stimulate economic growth, and try to raise confidence on the economy, both by domestic investors as well as foreign investors. And therefore, hopefully, we could see some realistic plan on how we are going to lift the capital controls. So what we need to stimulate domestic consumption is, in my opinion, that we need to see uncertainty reduced. For example, we have seen there has been some political uncertainty regarding our main export industries. We need investors and households to have more confidence in the economy so that they will be willing to invest here in Iceland. And we need to see more stability, both in price level as well as just in the economy. So we need to see investment recover, then leading to rising employment and growth in household purchasing power. And then we can hopefully break from the current situation where we are seeing that we have low economic growth and there is a delay in lifting the capital controls.
With Iceland committed to the krona for at least the next few years, as you've mentioned, and exiting currency controls a government priority, how strong are arguments that the Icelandic currency should be linked to a more stable currency? And what are your forecasts for the krona over the short, mid and long-term period?
The argument that the ISK should be linked to a more stable currency are that you are actually just importing more credible monetary policy overnight. And also you are reducing exchange rate risk and reduction of transaction costs. The monetary or the Central Bank's Monetary Policy Committee has, in the last following interest rate meeting, sent out a clear message that instead of raising interest rates, they will fight high inflation expectations. And of course, we are seeing inflation above target by using the FX market intervention to support the krona. So I think that if you're looking at the krona in the short term, the krona will be at the similar level as it is now. But if you're looking at it for medium or long term, it depends on the inflow and outflow on the FX market. So like now, we are paying down our external debt very fast, and the repayment profile of our FX debt is very heavy, or actually too heavy for the economy. So if we are not seeing any extension of FX loans, no refinancing or no selling of FX assets to pay down our debt, then that will put pressure on the krona if you're looking at the medium and long term. But I do not think that there will be pressure on the krona in the coming months, especially now in the summer months that we are seeing tourists are coming into the country. So there's more inflow than outflow in the coming months.
That's all we've got time for right now. Coming up tomorrow, I'll be taking a look at Australia's employment data and we'll be bringing you another Commodities Corner interview. Goodbye for now.